Hello everyone, welcome to my channel. My name is Ankit and today's topic is trend. Please go through my disclaimer section. First question, what is trend? If you go by book definition, market trend is perceived tendency of a financial market to move in a particular direction over a period of time. Understanding trend. Okay, you might have heard these terms: long-term trend, short-term trend, medium-term trend, trend change. So what are these? We'll understand each one of them. The first one is very long-term trend. Very long-term trend is determined on the basis of monthly candlestick. The holding duration of this trend is 10 to 30 years. Who uses them? Very long-term investor like Provident Fund and insurance company uses them. The next is our long-term trend, which is determined on the basis of weekly chart. The holding duration is 2 to 5 years and long-term investor like mutual fund, PMS, even retail uses these candles or these trends. Okay. The next one is our medium-term trend, which is determined on the basis of daily chart. The duration of these trends are 6 to 12 months. Retail and opportunity fund are user of this particular trend. The next is our short-term trend, which is being determined on the basis of 1 and 4 hour. The duration of these trend can be few weeks to 3 months. Retail and positional trader, speculator and hedger are the user of this particular trend. Next to our short-term trend, very short-term trend and intraday. Okay, so very short-term trend is determined on the basis of 15-minute candle. The duration of trend is 3 to 5 days and generally day and positional trader are user of this particular trend. Even a speculator and hedger use this. The next one is intraday, which is determined on the basis of 1, 2 and 5 minute candle. As I told, it's intraday trend. So somebody who enter in the market at 10 a.m. on the basis of few candle and may enter at 2 p.m. for just 1.5% kind of gain. So somebody who just enter into market for few hours are the user of this particular trend. Most of your trade trader and hedger are the user. Now let's see each one with a practical example. So here we have a Nifty monthly chart of around 20 years of data and I've used 50 EMA Ichimoku for monthly and weekly chart and only 50 EMA for rest of the other charts. So here we see right from 2000 Nifty almost came till 18,000 and most of the time Nifty is trading over this trend line, which is our 50 EMA. So here 50 EMA I am considering as a major trend line. Okay, during this time at once here, second here, third and fourth. Look at my blue arrows. So almost 4 times during last 20 years Nifty hit this trend line and took support at trend line and went up. At 2 times, one is at 2008 collapse and second time it 2020 during the corona. It's broken this particular trend line and trade below this trend line for few weeks or few months. This is a monthly chart. So if we look this overall direction of Nifty still looks up and it's already gone almost 10 times in last 20 years of time. The next one is Nifty weekly chart. So most of the time this Nifty weekly chart, is our this particular trend line. It's continuously trading over this trend line most of the time. Here it's broken the trend significantly and came well below trend line for almost 4,000-5,000 points. This was corona time and here we see around 11,500 Nifty have resumed this uptrend and from 11,500 it went all the way till 18,000 plus. So nearly 7,000 plus point of gain on the weekly chart if you just look at on the basis of 50 EMA as your trend line. Of course, if we look here, our RSI was well supporting our buy pattern. Here RSI was suggesting the market is highly oversold, and of course here market was suggesting market is suggesting it's highly overbought, and then there was a good correction here around 15,000 mark, and second time here around 18,600. Again your market was suggesting highly overbought, and then market came down from all 18,600 to all the way well below 16,000. So our RSI as a long-term indicator supporting our decision whether we are into long-term overbought or oversold zone. Okay, now we are looking into Nifty on the daily chart, just on the basis of 50 EMA line. So here we see around 15,000. Before that it might be below this trend line. So here it have changed the trend direction. It started trading above this 50 EMA line, and from there it went all the way till 18,600. So if we consider this itself looks like almost 3,000 point movement, and this time looks like 3 to 4 months of time. Other thing to notice, when it was consolidating and it took support again at 50 EMA line. Okay, we'll see some other example. So here Nifty have broken this trend line and came all the way down almost, I think, 1,000 plus point. And when it was resuming its uptrend direction, again your 50 EMA came as a strong resistance. It did not penetrate inside, it did not broken, and again it came down. Here we saw 50 EMA, Nifty have broken 50 EMA here, and then from this point onwards almost 17,600 it went to 18,300. Here we see it's broken this 50 EMA here, did not allow to penetrate and started coming down. So something around 17,400, it came all the way till 15,800. Again we see here the trend change here. The few candles are done above the trend line, so this confirms our uptrend. Near to 50 EMA is entry, so something around 17,100, it went all the way till 18,200, or 1,100 point movement. And now we see here at last couple of weeks Nifty is consolidating below the trend line, so we might see a downwards movement from here, but as of now it's nothing confirmed because the last few candles are trying to penetrate in the 50 EMA line on the upside. Okay, now look Nifty on the basis of hourly chart. You see trend change here, came down almost, I think, 1,000 plus point. Again trend change here, and this is again a good right from 17,000 to 18,000 plus movement. Yeah, so this is again almost 1,000 point, and you see it's almost consolidating, though broken couple of times, but took support around 50 EMA and moved changed the direction. Again now that here we see the direction is down. Okay, here Nifty have broken 50 EMA and continuously trading down, and here we see though it penetrated into 50 EMA, but this more of a fake signal, or could not broke decisively, and again it started coming down. The next one, Nifty on the basis of 15-minute chart. Again now, okay, important thing to note in 15-minute or even lower candle, if your daily movement is like opening movement is with either upwise or downwise, then we may not be able to determine the trend. So in that case we have to only play with the when the price is very near to trend line rather than on the basis of opening. Okay, so let's say this, whenever this trend was continued, it may be in the morning hours or some other time during the day, but this is a point it is trying to enter into a trend. So we know this line will act as a resistance, so somebody can sort the market here with just 30 or 40 point as a stop loss. Again we see similar pattern here. Here we see the similar pattern. Market is going up, this is upside confirm, and from this point it tried to penetrate in the inside, but market rejected and it started moving up. Again we see this is upside, and then here it retesting the 50 EMA line, and then market did not allow to break from here, and this become as a support, and from this point market went up. So of course when we are playing with the 15-minute candle, we are not playing for a very long term gain. We are just looking for a 0.5% kind of gains, because that's how 15-minute candle will work. The next one is your Nifty on 5-minute candle. Again the same thing, if there is a opening, a gap up or gap down opening, then we are not going to use opening candle. We are going to wait when the 5-minute candle comes near to 50 EMA line, and on the basis of whether it's the trend is up or down, on the basis of 15-minute, we'll try to use the same trend, same direction on the 5-minute. Okay, so if 15-minute is giving you overall up direction and the 5-minute also changing direction from lower to up, then we'll try to enter into those particular setup. Like this overall direction looks up, and then here this is again making this uptrend, trying to enter and start going up. So this is a point one can enter into a trade. Okay, the trade stop loss might be as low as 20 point, and one can just exit at 40-50 point gain, not more than that. Here we see the trend direction has changed down. So these are the, it's continuously now below the trend. So if the price comes near to a 50 EMA line, one can short the market here. Again we see this direction looks up, so somewhere near here, let's say now this is uptrend is continuous here, continuing. So near to 50 EMA line one can enter into a trade on long side, and just a 20 or 30 point as your stop loss, and one can trail with the either the stop loss, moving the stop loss, or one can look for a 40-50 point, 70 point gain and exit from the market. So these are the ones mainly used by intraday trader. Okay, that's all for today, guys. Before I end, I'll end with a quote: a trend is your friend, which is a very common quote. That's all. Thank you.